on them new stocks, this where you get that. So go and grab you a nice chair. It's time to sit back and talk to profit. Hey, you talking to the prophet. Hey, you talk.
Hey, we're going live with Nick Black in 5, 4, 3, 2.
Pew 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 pew. Those last two, guess who those were for?
Dude, honestly, those were
Brandon.
weak sauce. I don't care if they were for me or for anybody behind me, including like any of my little friends back here, but those were weak
all
sauce.
of your friends
those were
just
the
got
weakest of your pews.
Your brain dumpster juice just spewed all over them. It went
that much
through,
knowledge went all over them.
It went through your eyes, all 86 IQ points out the back of your head.
Here we go. Here we go. All of them. I'll take 86. I'm from Idaho, and 86 is a top 1% for me. So
that probably puts you in the best schools in Idaho.
Mm-hmm. Every day of the week, buddy.
So, is there anything going on in the news? I didn't see much. Did you see anything that was particularly of interest to you? I was looking at some recipes for like a Ukrainian souffle. Nothing interesting.
Yeah, I saw those too. I think that hit the news pretty hard. Those souffle recipes.
They're hot.
I think we're looking at that.
You got to cook them really hot.
Yep. I'm looking into some sewing classes just because there's so little going on right now. I think I'm going to pick up a new hobby. I want to be able to sew dresses and things for my little girl.
Have you tried underwater basket weaving?
I've heard that's the new trend. Are you kidding me? It faded out in 2001, but it's coming back. I will definitely look into that. Okay.
And do you remember our quote for the day?
I don't know if I can repeat it, but you can.
If life deals you blisters,
I'm getting that tattoo right here. Right, we're gonna put it right here.
Listen, everyone, I've got it. Brandon and I came up with a new quote for everyone. Whenever you're having a bad day, I just want you to remember this. Everyone in the chat, please dial this in. If life deals you blisters, make oyster aid. And you might think, well, how does this refer to anything? Oh, it doesn't. That's what happens when you say something very clever and cunning and Siri perverts it, because that's what Siri does. Okay, away from Siri, welcome to Alternative Wealth Daily Live. Yes, there is a lot going on, but most of it you can't control. And so since you can't control stuff, you want to at least be able to explain it to yourself and to your checkbook and to your accounts so that you don't panic and do silly things. You know, whenever there's an interesting quote, it says like, George Soros said, whenever I see a bubble, I rush towards it and I buy, which is kind of interesting because you would think, oh, if there's a bubble, I want to be, but it's part of a kind of greater explanation of what the bubble mentality is and all this. And psychology is on these waves, and we've seen this throughout time, and that's probably not going to change. So we're going to talk about a couple of things today that show you that other than the price of Bitcoin kind of not doing well yesterday, and there are some black swan events, Putin and all this kind of stuff, that are coloring the markets. Remember, in a chaos, in controversy, in panic, everything is correlated. Everything's correlated because when you run, if you see one person run by, you're going to be like, oh, look at that person running. If you see 1,000 people run by, you kind of go, I guess we should be running too, and you just get up and start running. But at a certain point, when you're all running and you're not sure what you're running from, the smarter people, they slow down. They go, hey, go to the side for a second. What are we running from? And then you turn and look around and say, look at all those people left their wallets on the concrete. Let's go get those wallets. That's kind of what you should be thinking about. Let's go get those wallets. So we're going to talk about a very interesting survey that was done by BNY Mellon. We're going to talk about the stablecoin hearings and this whole kind of psychological concept of a crypto winter. Everybody's like, oh no, a crypto winter, which I think is kind of nonsense. But there are, again, the waves in psychology, and we will walk you through that a little bit. And then, of course, we will answer your questions because Tuesday we just went so fast that we didn't have a lot of time to answer questions. So we will answer your questions. And then randomly, Brandon will interject with things that will probably make you question the reality and the fabric of space-time. And that's okay. That's okay. That's why he's
good for that to happen on occasion, just because you always need to check yourself. Because if I don't interject and I don't do that kind of crap, then how are you going to know that you're still alive? So that's on. You're welcome.
Hey, Brandon, if life deals you blisters,
blisters, you make oyster aid. Here we go.
common sense 101.
Duh.
There's gonna be a lot of people. They're gonna be driving. Someone's gonna go, I finally get it. No, you don't. Because no one gets it. The only person that gets it is the narrow AI chat text thing inside Siri. No one else gets it. Maybe later on the robots will joke about it. We gave them the keys to the universe and they laughed at it. Ugh. Anyway, so let's talk about these this kind of survey. Don't you think it's kind of interesting?
Okay, yeah, definitely. So let's pull this up so they can see it. Let's let them look at it.
So here's what's going on. There was an interesting survey done. More than 3/4 of surveyed family offices. So that's not like, you know, going office to office and saying like, is there a family here? It's family offices are, think of it as a baby hedge fund, but you're managing a pile of money for a family or an extended family or for a trust, something like that. That's kind of where your head should be. So these are baby hedge funds. Sometimes baby hedge funds can be really big hedge funds, but these aren't typically where the public can enter, right? This is a kind of a closed loop little thing. So more than 75% of these family offices say they see that they could benefit in the crypto space. And who did this kind of survey? Well, BNY Mellon Wealth Management. You say, BNY Mellon, they're not that important. Au contraire, they are, in fact, the most important. They manage more money. I've heard they manage more money than the good Lord Jesus. Did you hear that? Did you see that statistic? They said Jesus 41 trillion, BNY Mellon.
Does that account for inflation though? I mean, if we're doing the maths and the subtracts, are you sure that accounts for inflation?
I'm gonna do a quick side note. There was these people were remember when like the Indians, the Native Americans, they really got screwed and they kind of got swindled out of like Louisiana and Florida and like basically the whole United States for a bunch of beads. They got like some beads and some garbage, like the same thing, like juicy couture, like trinket jewelry and stuff. Someone's like, well, it may have only been $14 worth of trinket jewelry, but if properly invested.
Okay.
So it's not that that anyone screwed over the Native Americans. It's that they just didn't have any investment acumen. They certainly weren't BNY Mellon and they weren't Jesus.
They should have invested those beads accordingly instead of losing them in the dirt. Gosh.
They should have given it to BNY Mellon, I'd say. Anyway, a new study from the private banking services sector, the firm BNY Mellon Wealth Management found that 77% of family offices are interested in or involved in crypto, meaning some of them are already kind of working their way in, you know, the stair step, right? The stair step is the Bitcoin. Well, what's more, 40% thought that crypto was important to augmenting their strategy, and over 66% intend to increase their crypto exposure within the next 12 to 24 months. And you would think, well, now it's going to be even less. No. That's not how people that move money really work. Now it's going to be even more because they realize, and you should realize this too, everybody just got a 1-year time machine. I do it all the time. When I'm doing cardio, I go, man, if someone presented me with the idea of time travel, like, okay, Brandon, I give you one time travel token. Where would you go and when?
That's super easy. The day that Bitcoin started, baby. That's it. I want it. I want all of that. I could go back further, but I don't want to go back that far because I've watched those older movies and I don't think I could survive in some of those older times. You know what I'm saying? But I know I could survive in 2008, 2009, 2010. Easy. I could easily make it through those years.
Okay, so that's stay on screen for this, Brandon, because we need your reaction. Okay, so that's one way to do it. That would be the simpleton way, right? That's the 86 IQ way, and that's good. That's fine.
No, don't complexify this, Nick.
No,
Come on.
Well done.
I had
well
2
done,
seconds.
sir.
Let's go.
But
Okay.
if you, as we do, we look at payoffs and incentives in a game. We look at what's the best way to do this. You don't go at the beginning of Bitcoin because If you went in at January 3rd, 2009, day one, Genesis block of Bitcoin, you might in some way pervert the future in a way where Bitcoin doesn't make it.
Oh, yeah. I thought about this because I'm like, if I went back and bought a bunch of Bored Apes, right when they minted, would I have ruined the success of the Bored Ape Yacht Club?
Yes.
I'm thinking that through now. You're right. That's why I'm only buying 2. If I go back, I'm only buying 2.
2 Bitcoin?
I know what I'm doing. 2 Bored Apes, dude. 2 Bored Apes. When I go back, I'm only buying 2 Bored. I've thought about all this, like, extensively. I'm like,
we do this. We have this kind of weird thinking.
I go to sleep and wake up.
I would go in the spring of 2014, right after MT Gox, and on the way back up, because that was the last time probably when if Bitcoin was going to die, that's when it would have died. And the fact that the MT Gox hack, which by the way was Magic the Gathering online exchange, not exactly the super secure place to probably keep the world's store of value. But anyway, I would go after the hack, spring of 2014, on the rebound, and I would sell everything. And at that point, that Bitcoin was going to make it because, again, you have a time machine. That's when I would go into it. And $500-600 is probably worth, I don't know how many hundreds of millions, but you did pretty good, right? So that's where I would go. Okay, now, why all of that nonsensical brain effort was because you guys get a chance to do that right now. For those of you that do believe in the crypto space, that do believe Web3 is coming, that do believe that the internet will continue to exist far after Putin, that do believe that humanity will move iteratively forward, regardless of what's going on in the markets, whatever the Fed does or doesn't do, which whatever they does or doesn't do doesn't really matter. But all of these things, these are little flashy headline events, blah, 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 and it makes everybody go, and in a panic, we all run into that. But you here should be moving to the sideline and saying, hold on, wait. Let all these idiots run. I'm just going to buy all of these things that I like already, and I'm going to buy them at a 1-year discount. I just got a time machine. Everybody here just got a time machine. Now, for a fact, if you're uncomfortable right now, take a breather. I know a lot of people that got into the space. If you got in November, you got in at the very highest part of the entire crypto space in the history of crypto. So yeah, your book is going to look a little perverted right now. You're going to be like, I'm down X%. It doesn't matter because, again, when you were buying in November, it wasn't to sell out in March. Unless it's March 2026, right? So you look and you say, wow, what is big money doing? Well, there is no bigger money than the biggest money, and that's BNY Mellon. Why do you think they're leaning so heavy into crypto? Matter of fact, this is not even a story we're covering, but they also partnered up with Chainalysis because they want to know what every human is doing with their crypto, at least every human that has crypto exposure. It doesn't matter what Chase does. It doesn't matter what China says or what Russia does or what Putin does or doesn't do and having his thing measuring contest with the rest of the world. None of this stuff matters. Jerome Powell doesn't matter. You know what matters? Money. It matters what the money is doing. And the biggest holder of money is BNY Mellon, 40 plus trillion. And if they're going neck deep into the crypto space through analysis, through surveying, through investment, through custody, through direct and indirect investment, because they're buying infrastructure as well, then you should be doing the same. Then the question becomes, okay, how do I want to position myself? Where is the most kind of advantageous thing? So understanding what the big money does tells you exactly what to do. We couldn't have done this 20 years ago. We couldn't have done this 10 years ago. We didn't have access to information in real time the way we do right now. So we have a huge advantage over our former peers. And we're on even playing field with hedge funds, pension funds. Matter of fact, there's set of laws going through. Well, laws, we'll see. Regulations going through that would make private funds disclose their holdings. Well, the cool thing about crypto is that we can already see where everything is. So this wouldn't matter to us. Now, in the equities game, your book and how you manage that book mostly is the secret sauce. Everybody knows you got sausage. Some people's sausage tastes better than others, but you don't see till after the fact what was inside the sausage. Well, they're going to make everyone basically open up the coat on the middle of Times Square in real time. Everyone's going to have to disclose everything. Again, in crypto, we're already there. So the world is being slowly decentralized. Follow the money. Yes, open the kimono. If it's a kimono, that's kind of creepy, but yes, open it up. So there we are. The survey process involved 200 participants, 200 family offices, which is pretty good. It includes 56 single family offices and 144 multi-family offices, all managing over 150 million in assets. I don't know if that means, because that would be tiny. If it's not 56 family offices that each only manage 3 million equaling, I think they all manage over 150. So it's 56 funds. So $75 billion worth ish of assets. That's pretty good. Half of the participants from the United States were from the United States, with the others from the UK, Canada, Australia, South Africa, Italy. What is that? Like 3 people with $6? Come on. Germany, India, Brazil, and others. There's a lot of money in India. I don't know. Brandon, do you know how there is so much money in India? I guess anywhere where you have billion plus people, right?
Yeah, once you do the math, then yeah, that's a big sway. If they were to all get on board for crypto, even if they're all putting in 32 cents, that's $900 zillion if I did my math correctly.
Yeah,
I usually do. Yeah.
It's a bagazillion.
Mm-hmm.
A bagazillion. Bajillion. It's a godzillion. Oh. Anyway, it's interesting. In India, it's very normal for them to give gold and kind of diamonds and things like this. When I was in the gold business, one of our biggest secondary buyers, all of our diamonds went to India and to Indian businessmen. Like they would buy and resell all of our millistones, and at probably half of our gold went there to jewelers and procurers and all sorts of other stuff. This is kind of interesting. But what happens when in India it gets cool to give Bitcoin? Wow. Anyway, keep it in mind. So it's very interesting to see where the big money is looking. The big money right now is looking at all these family offices. Their main motivations for crypto investments were to follow the latest trends and a belief that crypto offers a good investment opportunity. Of course, people in funds want to make money for their families. And think about this. You're much more discerning with your family's wealth than you are with your personal wealth. Like, Brandon, if you were managing, well, not my grandmother because she's, high as a kite, but if you were managing any other grandmother's money, would you be more or less safe with it than your own personal money?
Yeah. I mean, obviously I'm going to be safer because she's going to come out and she's the closest to passing on. So she's the closest to like being able to haunt me too if I mess up. So definitely on the safe side.
But I mean, when you're managing family money, you're going to be more, I would be more careful. I would be uncomfortable. First of all, I don't manage any family money. I've had this discussion with my dad. He's like, hey, I'm like, nope, not a dime. There's a line one should not cross. But, so family fund money, family office money is much more conservative money. So anyway, it's just very interesting to kind of think about that. And absolutely anybody, if Brandon manages your money and he loses you even a penny, matter of fact, even if it's an unrealized loss, even if you're just tax harvesting, I do urge you to summon the forces of darkness and haunt him. But he would probably enjoy it, which means it's not really haunting.
Here's the thing, Nick. I would even go one step further. Like, even if I tell my mom or if I tell my dad or my friend, hey, go buy Bitcoin, I'll tell you what, the next day, if Bitcoin has dropped 6 cents, I get phone calls
Oh, yeah.
immediately. Why did you tell me to buy this Bitcoin?
Oh, you can't
and
win
it's
with
a
family.
bad state.
You can't win with family because here's the other story, Brandon. If you tell them and it goes up, later on they go, "Oh, I bought Bitcoin." You don't even come into the discussion. They took the courageous step to buy Bitcoin. If it goes down, Brandon made me buy Bitcoin.
Yep.
They're never culpable. You can't help family. You want to help family? Get them one of those butcher boxes. I mean, I guess if they're into some weird diet, you can't do that. But where they just delivers meat every week, or like Fresh Start or something. That's the only way to help family. Just send them food, man. Because if you give them investment advice and you're wrong, even for 13 seconds, you blew it. And if you're right, you never get credit. So don't help the families too much. Okay, we've beaten that one into a pulp. Why it's important, pay attention to what BNY Mellon is looking at. BNY Mellon, specifically, their wealth management facility has $321 billion in total client assets. But on the aggregate, BNY Mellon's net assets are over 40, I think it's over 41 trillion with a
Hey, did
T.
you use a T there? Hey, Nick, was that a T?
With a T. Have I taken you on my journey of millions, billions, trillions? Have I taken you on that journey yet?
I have not got on that trip yet. No.
Okay, so I did this with Eric, but like just to kind of put it in perspective, a million seconds ago, you and I were doing, like 2 or 3 weeks ago, we were doing one of our Tuesday shows, right? One of our office hours. That was a million seconds ago. Okay.
Fair.
A billion seconds ago, you were in high school, very likely. Okay. That's a billion.
Okay.
A trillion seconds ago, there were woolly mammoths and saber-toothed tigers hunting humans on Earth.
No, that tracks? What?
Yes.
That's a lot.
A quadrillion seconds ago, it would still be 37 million years before the first hominid would walk the Earth.
Oh, that's a stretch.
There are 3.5 quadrillion currency units floating out there, of which some or all may end up looking or running across crypto rails. We're at 1.5 trillion market cap. So we have probably 2,000 to 3,000x in this market coming if all it does is make the markets as they are now better. We don't have to reinvent anything for crypto to be incredibly, ridiculously successful and for all of you to live in a freaking cloud city. All it has to do, I think it's over. Dr. J, I think we're more than 30. I think we're 33 trillion in debt, aren't we? But all that crypto has to do, the entire space, is offer solutions to ease tensions in the traditional equity space, real estate, and derivatives. And we have at a minimum 1,000x left in this market. And you say, does that mean my particular asset's going to do 1,000x? No. But on the aggregate, the top performers are going to do very well. And then you start saying, how do I find an ancillary? You start going and looking at the Amazons and the other companies. Look at the FANGs, look at their 20-year, look at their 10-year track record. Remember that everything in crypto happens faster. Things go up faster, things come down faster, things blow up faster, which is what you want. You want markets that move fast because you have big fat premiums, you have big fat winnings, and when companies are junk, they get blown up quickly. So many smaller, well-placed bets can pay off many, many, many more multiples than waiting so that your grandkids can retire off of your equity investment, please. So you guys have to think that we don't have infinity time to be investing. We have to play an infinite game, but our lives are measured in seconds, minutes, and hours, 168 of those hours a week, 52 a year-ish. There's only so many years. You want to be in the equity market, racking 7 to 12% like a winner until what? You're 900 years old, Methuselah, and then you're going to celebrate? I'm rich now. Great. Buy a bone graft. Please. You guys want to make a material change in your life. in the next 3 to 5 years, it ain't in the equity space. It's here. And this is probably it. This is the only place, unless you're a degenerate gambler. So, just kind of like, where else? I get this question all the time. We're onboarding new clients overseas right now. And they're like, well, where else? I say, yeah, tell me, where else would you go with your currency units? And everyone always returns to crypto. They're like, yeah, there's nowhere else where these multiples are possible. It doesn't mean that everything you invest in is going to win. VCs might invest in 40 companies and 2 of them are home runs and the other 38 are dumpster fires. But that's okay, because the multiple you get on those 2 is so massive and the other ones die so quickly. Anyway, that's all there is to say about that. Now, we say, okay, great. So BNY Mellon, they're giant, they're massive. They're getting into analysis. They're surveying family offices. They're looking at where the money's going, and they're already the biggest. So then, okay, where else should we be looking? Well, we got to look at regulation, don't we? We know where big money's looking. We know where big money's investing. Well, let's look at what the policymakers are saying. So that brings us to our next story. Brandon, you want to throw that up? Bam. So the takeaways, there've been these, I'm sure you've heard this, there've been these stablecoin hearings in Washington, and the Treasury came in a few weeks ago and said, we should make stablecoins have to fall under the same restrictions as banks, to which a lot of congressmen and senators were like, we haven't had a stablecoin financial crisis. We have had a banking financial crisis, right? Banks, knowing that they're always going to get, they will always be bailed out no matter how. Let me give you another statistic before we even start the show. Brandon, please. I want your reaction.
If you will, please hop on here. What's up?
Great financial crisis. $4 trillion was given to big banks and insurance companies, the most profligate gamblers, the people that created the GFC. And yes, it wasn't people taking loans that they shouldn't have had, because they wouldn't have gotten those loans if, scrupulous, creepy salesmen and bankers hadn't basically unloaded ridiculous ninja loans on everybody. Okay. So yes, people shouldn't have been doing the things they were doing, but they were certainly enticed by morally corrupt bankers and a whole morally corrupt banking system. Okay. So what happened? How did they get dealt with? Well, easy. They got $4 trillion in bailouts. Big banks and insurance companies. Does that seem fair to you, Brandon?
If I was a banker, that would be way fair. Yeah.
Right. Did you get your part of that $4 trillion bailout?
Well, I haven't seen it yet, but I'm still hopeful.
Anytime.
I'm an optimist in life, and so here I am sitting waiting.
So guess what happens? Guess what happens at the beginning of COVID when the stimmies start coming out? Do you want to know what happened? You want to know who got some money? To the tune of about $4 trillion. You want to guess who?
Well, I got some pennies, but I'm sure they got more pennies.
About 92% of it. I'm not making this stuff up. Go do your research. More than 90% went to anyone? Big banks and insurance companies. But here's the best part. These were to repatriate losses they sustained pre-COVID. Meaning, most of the stimulus money went to big banks and insurance companies for losses they sustained between the great financial crisis and before COVID, having nothing to do with COVID. And so it starts to make you realize, and again, there's no point, it's not a get mad or get happy thing. It's just a reality. This is the way it works. They will always be bailed out, always and forever in perpetuity. Every single time. And it doesn't matter what they do. It doesn't matter how bad they gamble. It doesn't matter how bad they lie, cheat, steal. It does not matter. It's not an emotional thing. None of this stuff should make you emotional. It should just make you go, okay, cool. At least I understand the fabric. This is the way the landscape is. So when people say, why crypto? At least I know who my enemies are in crypto, right?
You're making me want to start a bank at this point. Yeah, I mean, I love gambling. I love doing some of the stuff like, the banks might do. But I think I need to start a bank now because I figure I can't lose.
Well, you'll get all your money back. So basically, what a lot of these senators and congressmen, when they're not trading against us on inside proprietary information, which they absolutely are, occasionally they'll say something kind of good. And when the Treasury was presenting a few weeks ago that we need stablecoin companies to be a lot like banks, the senators and congressmen rightly said, well, that didn't do us any favors in the great financial crisis. Banks were the reason for most of this. And there's a lot of poor behavior on all sides of the fence, but it wasn't the weak American consumer getting loans they shouldn't have that created the crisis. It was a reciprocal of really, really bad behavior in the first place. So that brings us to now, and regulators are trying to wrap their minds around how are they going to regulate stablecoins and how far should they go? And it's not cut and dry, but essentially it's kind of, let me give you the long story short. The United States Congress turns its attention to the stablecoins this month with senior Treasury official Nellie Liang fielding a range of questions during twin hearings in the House of Representatives and the Senate. Didn't go really well for the Treasury. They didn't come out smelling like roses. The hearing centered on a recent report on stablecoins penned by members of the President's Working Group, which she oversaw. That report urged Congress to create the rules of the road for stablecoin issuers, mainly, and this was a point of contention, by restricting stablecoin issuance to insured depository institutions, which starts to create a class. They're basically trying to regulate out private industry from these stablecoins. The Treasury's already designated stablecoins a systemic risk. And that, but just a year ago, they were saying that no one's using them. So I guess I'm confused. If no one's using them, how are they a systemic risk? That's like saying, Nick's cell phone is a systemic risk. Well, no, I can only call so many people. I don't have any, no one even answers my calls. I call Brandon all the time. Brandon, have you ever actually answered a phone call from me?
No, definitely not. I don't see any
no
reason
systemic
to, right?
risk from systemic risk from Nick.
That's right. That's right.
But stable coins, look, everyone knows that Tether is fake and no one cares. Systemic risk, it's systemic sigh. What is it? What is a dismissive sound that one might make? What's that? What's the word for that sound when you just go pss, pssing? Is that a thing? PFF. He pfft. Anyway, that's basically what the risk of these coins is right now. Pfft. That's it. Larry, you just won the internet. So the Financial Stability Oversight Council is basically saying, well, it's a systemic risk, man. The Treasury is saying it's a systemic risk. Don't you agree? And they were basically intimating that if Congress fails to act, the council can step in. Right? Listen, if Congress doesn't come out here and regulate these stablecoins because we don't have any control over them. Yes, Treasury, you issue debt and occasionally you create currency units, but mostly you just sell off the future right now by issuing debt notes to banks to act as middlemen in your little weird Ponzi scheme back and forth with the Fed, and they transfer bank reserves, and you have, whatever. Anyway, so Treasury's not liking that they realize, because they're not dumb. There's no dummies anywhere. There's individual dummies, but as a group, they're very smart individuals. Yes, there's even smart people at the Fed. You never hear them speak, but they are very smart. And so essentially, the Treasury realizes that their base of power may be eroding, and they're starting to become tense. It's no accident that you have Jerome Powell running the Fed and you have former Fed chief Yellen running the Treasury. They thought it would be a 1-2 punch, and it's actually been a 1-2 exposure of how weak they are philosophically. I mean, just the overall weakness of their ability to understand how complex these markets are. So Liang told the House and Senate that she believes in flexibility for any charter standards related to stablecoin issuers. In the meantime, proposals are being floated around on the Hill. There's all sorts of different stuff. But the key kind of things were why stablecoins are really all that important for the Treasury in the first place. This came up. Proposals in the working group report on stablecoins. How much money should a stablecoin facility, like if you're going to issue a stable coin, how many dollar currency units should be behind that? I mean, ideally, you and I would probably say, I'd like it if all of a stable coin was backed by US dollars. I'm not a big fan of commercial paper and all these other kind of sketchy things that Tether has. But then you say, okay, forget all this other stuff. How capitalized is the US dollar? Like, if you were to think about it, what capitalizes the US dollar? Well, it's not gold, right? We went away from that many, many decades ago. So what's actually behind the US dollar? Well, War Powers Act, taxing authority, and jackbooted thugs with battleships, right? And freaking nearly spaceships that can missile you from hundreds of thousands of miles away. That's what's behind the US dollar. So you go, well, what's behind any currency? Faith. It becomes a religious exercise. So if you reduce anything, it's just all about faith. When you look at Bitcoin, and let me wrap this up, but when you look at Bitcoin is a different argument. Bitcoin is a mistrust argument. I don't have as much trust with US dollar or other currencies. I'm going to park some of my value units, right, into Bitcoin as a store of value. Cool. When you're talking stable coins, it does become much more about trust. Would I rather hold stable coins or hold US dollars? Now, right now, if you ask me, what's more stable, US dollars or stable coins? It's the same thing if the stable coin is liquid and pegged to US dollars. The same bad behavior in the US dollar is obviously reflected into stable coins. The problem is stable coins have an additional amount of platform risk and company risk, right? When you hear that Tether has 2% backing in cash, and even that's really suspect. It's like, yeah, it's in Panama and Manuel Noriega's private. You're like, what? Wait, that sounds weird. So, and all those guys have been indicted and they're all going to wait their day in court. Like, there's a lot of things not to like about Tether. However, many of the other stable coins are much more stable. I think one of the stable coins, USDC, was 50% backed by dollars, and that's pretty good. But again, you just have to decide. Stable coins for me are somewhere you hold as safe a stable coin as possible for a very small amount of time as a cash reserve to either collect some yield, right? Or to wait for an opportunity like this where the market sells off. And so I did. Last night, the markets were selling off. Everybody was panicking. I George Soros my way in. I bought what I've been telling everyone here I was going to buy. And let's jump to markets for a second. Let's pivot this over to markets. I've been buying the things that I've told you, nothing magical. I bought Algorand because 75, 74 cents. Are you kidding me? Thank you. I'll take it because I'm just trying to buy the assets that I feel safe that are going to build the foundations of the future. I don't care what the price is now. Trust me. I promise everyone here, I lost more on paper. I lost more than you did last night. One of our friends, Brandon and I's friends, he's in a near state of panic right now. Oh my gosh. Oh my gosh. I'm a rookie in crypto. I've been here 14 seconds. I've never seen my imaginary money be imaginarily less money than it would. Man, I'll tell you. Brandon, you want to see what I'm down? I'll tell you. I won't show you.
Yeah.
I'm not going to show you.
No, I mean, I can assume. I mean, we can deduce from the situation
I'm down
at hand.
I'm down in the last 24 hours. I'm down $483,000.
I wonder if our dear friend is down that much.
You ever go to the gym and someone's like, "I will rep." You do the heaviest bench you can do, and then some guy gets on there and just does reps.
Yeah.
He's like, "You done warming up?" Like warming up. I'm not warming up. That's my whole everything. He's like, "Yeah, I'm just warming up, bro. I'm gonna do like 30 or 40 reps here, then I'll start working out." I'm like, "Oh God." Well, I promise you, whatever your max losses are, I repped them, and I've still been repping them. It doesn't matter. I'm not putting on a veneer of like calm and collect. I don't care because I I didn't buy to sell today. I've been buying to borrow my way out 3, 4, 5, 7 years from now, many multiples later. And I've had my crypto account, by the way, since I was materially in crypto late 2016. I've had my account chopped in half, a Sigma event, 3 or 4 times, sometimes in like days. So what? So what? Because again, I'm not in this to make enough money to buy a cool car. If you want to make life-changing wealth, you've got to get out of the value of the account means absolutely nothing. You look at your balance, you look at quality assets, and the only time you change course is when the information materially changes and the investment no longer makes sense. Not the price. The price action is for rubes. It's an idiot carrot. You don't care about that. What you care about is quality assets that can achieve use, utility, and greater adoption. Follow your 5 T's. Make sure there's a reason for the token. Make sure technology has not passed it by. Make sure it's a team that you trust. Make sure the token even makes sense. Like you can explain it to yourself. Make sure the tokenomics are fair, right? Like as an example of bad tokenomics, let's say you create a Genesis block of, I don't know, 500 million tokens. And then you forget to tell everyone that another 500 million tokens are coming over the next 10 years in the form of inflation. That'd be kind of sketchy tokenomics. Let's say as part of that tokenomics, you take part of the tokens and you just hide them for market makers. And then on Twitter, someone discovers them and says, what are those 12 million tokens worth like $200 million? What are you doing with those? Like, what are you talking about? There's nothing to see here. They're like, it's crypto, dude. We can see it. Like everyone can see it. You realize this, Mrs. Trump, when you bought your own NFT, we can see it. You guys know about that, right? Where she had an NFT sale, coincidentally on Solana. She transferred money from one wallet to another, and then that wallet bought her NFT. But we're like, but Miss Trump, we can
watching this. They think that there's so much ambiguity and so much anonymity in the crypto space, but literally every transaction is signed digitally. That you can go and you can dig it all up. It's like reading the newspaper. It's like, okay,
yeah,
next
like these pictures
we got you.
Felt cute. Might delete later. Only it's not a picture of you. We can see, bro. We can see everything, and that's the beauty of crypto. The ability to go in and data mine and look at these things in real time. So, you know, there's all that. I was talking about Solana in every one of those cases, by the way. I don't know if you guys knew that. I
couldn't tell if it was Solana or the US dollar. Have you seen the comparisons to that? Because unlimited mint, unlimited supply, unlimited inflation. I didn't know which one you were talking about for a second there. But don't start.
Unlimited transactions per second. I mean, except for the limits of the internet. Oh, they're like, oh, yeah, that. Those limits. Yeah, the limits that we all have to deal with. Those limits, right? Anyway, long story short. So what do I like in the markets? Well, on days like today, for those of you that aren't licking your wounds, that are not licking your wounds and aren't all paralyzed by what you see in the dummy carrots, and you're just saying, okay, cool, where's value? It's easy. You go to your 7 to 10 core assets, because I believe kind of reduce the stress in your mind to 7 to 10 core assets. And as you're looking, what looks tasty? Well, let's look at the 1 year. You want to look where the deals are, go to the 1 year and see what you like, that you just got into a time machine. So almost 28% down is Bitcoin. Yes, that's a yes for me. Cardano, 24% down. Yes. Polkadot, 56% down. Yes. Trust me, Gavin is not going to be on the sidelines forever. They will eventually launch. Matic. Well, Matic's still having a pretty good year. It's up 700%. But Matic looks a lot better to $1.35 than it did at near $3. Cosmos, 13%. It's basically a wash. Take it. Near, still up 135%. And Near had a great year. Near still look, Near's still having a great year, but I'm a buyer of Near under $10. And by the way, for those of you that are dollar cost averaging through staking, you're continually buying. So don't feel like you have to go in and buy stuff. A lot of times just by staking and letting your rewards compound at whatever the frequency of compounding is, you're staking and you're doing great. You're doing what you need to do. You're compounding quality assets. That's great. Algorand, for me, a screaming yes. They're going to be a big enterprise player. They're not sexy. They're not juicy. They're not cool. They're not trendy. And their marketing is the worst. The worst. Let me tell you something really quick about Cardano before I forget, and then we'll go to your questions. Those are the things that I thought were super, super sexy. But because what are they? Key, protocol, core, Web3 infrastructure. You can't go wrong with infrastructure. Okay, really quick about Cardano. I don't know if any of you heard of Hypercycle. Brandon, have you heard about Hypercycle?
No.
It's a side chain that Ben Gortzel, the other smartest dude in the world, is launching for SingularityNet. So you basically have AGIX, okay, and it's running on Ethereum. They're porting over to run most of their transactions, like almost all of them, on Cardano. The smart contracting language Plutus, it's much more robust. It's Haskell based. There's a lot of reasons why many of the smartest human creatures are going to Cardano. But what Ben is doing that's really cool is he's creating a side chain of Cardano called Hypercycle. And essentially it will be really fast. It won't be for financial transactions so much as it will be to manage these AI agents. They won't need, basically the idea is that the individual nodes won't need a copy of the blockchain. They won't, matter of fact, as long as they are trusted nodes, they won't need any record of the blockchain. They'll just be able to function off Merkle trees. You say, Merkle trees, what is this madness you speak of? I'll keep it super simple. If you take a big long string of text, a paragraph, go into the chat, you can take a paragraph and you can run it through encryption software and create basically a Merkle or a little root number. And that root number is basically a chunk of text or data processed through encryption. It spits out a little number, a little signature. And if anything in that original text changes or data changes, it will produce a different number. Those numbers will no longer agree. So you can know that a big giant corpus of data has or hasn't been changed because the Merkle, kind of the root that's spit out, or the number that's spit out after it's hashed, will be different. So think of it as the hash, right? So a Merkle tree is like a little tree of these little kind of hash codes. And if anywhere any of those codes changes, because each hash gets hashed with another hash, you'll know instantly that it's perverted. So you don't have to have the entire record of everything. You can just have these Merkle trees represent, tons and tons of data. But it makes it much more elegant and lightweight so that this side chain can be moving really fast, because that's what you need for AI. For a bunch of narrow AI agents to all work together, they can't be loaded down with tons and tons and tons of data, superfluous data, right? And it is superfluous, right? There's no reason that every node in the system needs to have the entire blockchain, especially when you can take the net of those transactions like a bank does, bank requisition. You can take the net of those transactions that happen on Hypercycle, and every now and then you can post the net of those transactions to the Cardano blockchain. So this is kind of what's happening. So he's building this system. It's based on TOTA, which I don't want to go too much in the weeds. Just understand that this is a very interesting play against Cardano that's going to enhance the usability of Cardano as far as AI goes, which is very exciting to me, because if the AI community starts pouring into Cardano to use Hypercycle, all of that goes eventually down to making more use, utility, and adoption for Cardano. And this is a whole market that even, Ben was obviously looking at this, Ben Gortzel over at AGI, but the people at Cardano, IOG, and, Charles Hoskinson, they're all about financial and digital identity and sovereignty, digital sovereignty in Africa, in Central and South America. This is a whole completely different business model or stream, a new stream that could get its own use, utility, adoption. And remember, everything that's happening on AGIX and NewNet and Singularity DAO and all the other verticals is all pouring back to Cardano. So at 80 cents, I like it. Now, do we have some questions?
Yeah, we got tons of questions, Nick, but I think you might have already hit a couple of them. The first one, ADA. You try to predict. The first one, ADA predictions. What are we talking here? It's under $1, as you know. What do you think about getting to $256 by the end of this year, $52 by 2030? Been buying 100 shares each month for 6 months now. Should I buy more?
Here's what I can't tell you to buy more, buy less, whatever. I mean, there's a lot of things that make your risk aversion, the level of currency units you're dealing with, however balanced your portfolio is. I'm buying more Cardano every 5 days through staking. Okay. I'm staking Cardano. And so I'm earning rewards in Cardano. So in a sense, I'm perpetually dollar cost averaging into Cardano. So I urge everyone that owns any of these protocols, because most of them pay some kind of staking rewards, please go and stake them where it's safe. Take your time, do your research, get paid for free to hold the asset. As far as can you predict a price, there's really no clear-cut way, obviously. If anybody could predict prices with any accuracy, they'd have all the money and we'd have none of it because they'd be right all the time. That said, there are market cap arguments that you could make to get a loose idea. Do I think that Cardano, so let's look at market cap. Cardano's market cap right now, 25 billion. And again, this is weird because everything's down because, stuff. But let's look at it. It's less than it's about 8 to 9% of the Ethereum market cap. Is it faster, cleaner, more elegant, lower fees, more dexterity, better smart? Yes. Every single place, every checkbox, Cardano is better, except use, in that the world is using Ethereum for NFTs. It's not, in my opinion, super likely that Cardano takes over the NFT space. They don't care. They're not looking there. It was never really a design concern. And I don't think they care at all. I think they look at that as a very interesting place that it's right now neither here nor there. On the other side of it, there's 500 companies as of a few days ago, 500 companies building on Cardano. That's a lot. So who knows what could flourish from that? But I think, would it be unrealistic for Cardano to get 50% of the market cap of Ethereum and be 50% as utilized? Well, if they get Africa, the continent, and Central and South America, or Central or South America, or Africa, or any of the three, I would expect it to go to or past Ethereum, because that's real world use, utility, adoption, not sketchy, degenerate NFT trading, JPEG trading. Ethereum's got a lot of problems. So do I think Cardano can get half the market cap? Yes. So is there a 5 to 8x in Cardano left? Well, yeah, we already had $3.20 in September. So can we get $5 to $6 out of Cardano? Well, of course. Markets can behave very irrationally on the upside also. I think people were irrationally overpricing Cardano in September. They hadn't launched anything yet. The price should have probably been where it is right now, 60, 85 cents. We need to see apps and dApps and swap platforms and things like that launch in a meaningful way on Cardano. They have to prove themselves. But I will tell you this sell-off has been very good for the market. And this gets into the greater discussion, and I've been weaving this in. The crypto winter, whatever that means, which is kind of a stupid term for like no one's buying crypto. The best time to buy is in the winter, when all of the crummy dog food products, stupid stuff gets nuked. People go back to work. They have to start paying rent. No more free money checks. All of the idiots get nuked out of the market, get melted away. It's like they just opened the Ark in Indiana Jones and all the people got their faces melted. Those are all the people that really shouldn't be here in the first place. Sorry to say, if you got melted and you left crypto, adios. Don't let the door hit you on the way out. It is what it is. For those of us that are looking at this as like building the future, this is great. Because now the net IQ in the space is rising again. And the projects that you liked are repricing, probably repricing to the point, because what do? You sell things to the point where you're then comfortable. And at the point where you're comfortable, well, that is a more realistic price, isn't it? And then those companies can build and give us good, solid products and software and vision, and we invest more honestly instead of chasing the trends. So do I think this is where you want to be? And again, you don't pour all your money in today either. You continually, perpetually dollar cost average, balancing into the assets that you like in some kind of distribution that makes sense to you. Okay. I hope I overly, ridiculously, redundantly answered that question.
Overly and ridiculously. I think you nailed it,
Yes.
Nick. So right now we have Howard emphatically asking, is there a particular way that you could recommend keeping track of all your crypto transactions so that he can give them to his like a CPA or something like that?
Yeah, there are a bunch of different softwares you can use. Coin Tracker, I believe, is one of them. Go online and just look up coin tracking software. There's some of them that have spreadsheets and everything to give to the tax man. I use a few of them, and I also use Blockfolio on my phone. It's an app. And the cool thing about Blockfolio is that you can enter your buys, your sells, and all of your assets. It's really cool. And by the way, Dynasets is actually performing quite well. The only problem with Dynasets right now, and that's a Singularity DAO thing, the only reason they're not doing better is because everything is selling off. Dynasets themselves are performing much better than Bitcoin. They don't have a short function in it yet. It's not shorting Bitcoin on the way down. It's only going long or getting on the sidelines. It has outperformed Bitcoin, but it's not shorting. So it's not taking advantage of that side of it. So there's some adjustments they'll make, but remember, they're still in beta. So all of the data coming from Dynasets is very, very good. All right. So yeah, Coin Tracker and some other softwares. All right.
Canadian crypto freeze. It looks like Trudeau's trying to freeze crypto assets in Canada. Do you know where they can store those so that they don't? Never mind. But anyway, so do you know where
Trudeau?
Go.
Do you
go
think,
for this.
You know what? I heard he was on a phone call. I'm almost certain I heard this. He was telling, hey, Vladimir, no longer are we going to give you our maple syrup for you to put on your potato pancakes. You're going to have to get your maple syrup somewhere else. You know what we're all about. I think that's word for word what he said this morning.
How did you get your hands on that transcript, Nick?
It's like I channeled him.
With the accents and everything, they actually wrote the accents in there. About what are you talking about?
Yeah, vous comprenez qu'est-ce que j'ai dit parce que c'est très important. Okay, so look.
Anyway.
So, okay. Here's what I would say. Only if you're on exchanges like Coinbase and Kraken and things like that can they freeze your assets. If you have your crypto in private wallets or on a ledger or on any of the exchanges that might not be inside the United States, and I'm not going to say KuCoin or Gate because I certainly don't want to point you in that direction of KuCoin or Gate. Definitely do your own research. And if KuCoin or Gate were part of that research, that's interesting. But I'm not going to tell you to use KuCoin or Gate. I would not tell you that. Definitely won't tell you KuCoin or Gate or a ledger or any private wallet. You can even create, and I don't know if you guys know this, but be very careful. You can create paper wallets. Yes, a wallet where you literally send it to a private, the private wallet exists, but the only record of it you print out on a piece of paper. I would laminate that and have a couple copies and you could put it in a safe. Now, do I recommend doing this? No, you don't need to do that. You can get private Bitcoin wallets. You can get private wallets all over the place. You can use a VPN. I think everybody should be using Proton Mail. Anyway, there's a lot of ways to keep your money safe. Do a little research. You've got to do what makes sense for you. You've got to do what's comfortable for you. But if you're on a regulated exchange, they're regulated, bro. They got bosses. And on that note, we got bosses. And our bosses are telling us, hey, you guys have waxed far too long. It's time to roll out. So stay in school. Don't do drugs. Don't do anything myself or my poor insolvent drunk strung on meth grandmother wouldn't do, or Brandon wouldn't do. And that's very, very little.
Now their solutions to hard